Welcome to Loup TV. I'm one of your co-hosts, Gene Munster, along with Doug Clinton, when we dug deeper into the questions that we get asked the most about. And today we're getting asked about Tesla at $2,000. Specifically, would you buy the stock here? This is now a $375 billion market cap. Just a couple years ago, it was about a $50 billion market cap. It's probably not constructive to enumerate what got us here. What we really want to focus on is going forward. Doug, jump in and turn it over to you. What do you think about when you see, as an investor, Tesla at 2000?
The first thing I'm reminded of is the run in Bitcoin just a few years ago. I think the charts look somewhat similar. The difference is that Tesla is a real company. They're a real producing asset. Bitcoin, of course, is not. It's a different type of asset. But you can't help but see the move from, I think at the lows just toward the end of last year in the hundreds, now at 2000. We're talking about 10x increase in stock price in less than a year. That's a pretty substantial move for a company that is in the tens of billion dollars, or at least it was in the tens of billions of dollars when the move started. So I think that that is probably unprecedented. One thing that I'd love to go back and look at is what have other companies that have had that kind of parabolic move, a 10x move, and have been in the tens of billions of dollars in market cap, what have they done historically after that type of move? Not to say that Tesla is not a good company and that they couldn't be a good long-term investment, but it certainly gives me pause here when I see moves like that. It feels very emotional. I think there's a lot of retail trading going on that's helping prop it up too.
And anticipation of induction in the S&P 500, moving shares higher as that buying wave, people are trying to get in front of that buying wave.
Stock split too. Good news.
Stock split creates a lot of noise in the number, and that chart, as you said, is concerning, but we're fundamental analysts, we're fundamental investors, where we believe in long-term truths. And let's talk about where Tesla lies on that front. And I can say from my perspective is when I see this is advanced further than I had thought. Back when the stock was closer to 250, I had anticipated that this could reach $900, and it has far exceeded that. And ultimately, I think that as you really dive into the fundamentals, which I think is the real important part, there's going to be a lot of noise in how this stock trades based on the retail impact, based on what we've seen with the S&P addition, and I think also in the news flow around this. But it does ultimately ask a question, it begs a question, the fundamental question, which is the world is changing. Electrification and autonomy are undoubtedly the future of transportation. And Tesla has a good position within that. And so a question for you, Doug, is how do you feel their chances are? I mean, at the end of the day, back to our core question, you put all this together, put the trading in it, what's happened, and look forward at the fundamentals. Do you want to own this at 2000?
I'd be pretty cautious at 2000, and I would say this: I wouldn't be surprised if you think about it over the next 3 years. I wouldn't be surprised if you saw Tesla trade again at 1,000. Again, not to say that it can't be a trillion-dollar company long term. I think it can be, but I do think when we see a run like this, it is concerning to me. It feels like it is a little bit ahead of the fundamentals, at least over the next 5 years. And so I would be surprised if we don't get an opportunity to buy it cheaper in that kind of 3-year time period. And I would remind you, if you think back to Amazon, I think there are a lot of parallels in terms of this huge sort of open-ended market opportunity. Amazon, I think it's 3 times in Amazon's history, actually has traded down 80% from a peak level. And so that didn't mean that Amazon was a bad investment at any given time, but it did mean there was volatility. And I think if you do buy Tesla at 2000, you have to be braced for potentially seeing some heavy paper losses over that long-term time period.
So I'm in a slightly different camp. I think over the next 3 years, absolutely, you could see a 30, 40, 50% reversal in the stock price. But I think if you look at over the next 5 years, which I didn't ask you that question, but over the next 5 years, there's a strong case that this is still one to own. Put some perspective on this. As I mentioned, $375 billion market cap. They currently have 80% of the US EV market, around 25% of the European EV market, and about 10% of the China market. if you fast forward and think about ultimately what their market share can be, and this is a much broader conversation, but I believe that traditional auto is in a more difficult position than would meet the eye. They're essentially in a catch-22 in their ability to compete with Tesla. So I think that a reasonable, a realistic, I should say, market share target for the company in the next 10 years, 15 years, is kind of 25% of the global auto market. If you assume a $35,000 average selling price, that is $750 billion approximately in revenue. That would imply that it's trading at about close to just under 0.5 times revenue. I want to be very clear with this next analogy that this is no Apple. Tesla is no Apple. This company is very different in terms of culture, in terms of profitability, in terms of sustainability. But I do believe that in terms of the product line and how investors think about this, there is some similarities. Both of them are hardware businesses with a software component. Apple trades right now, I call it 6 or 6.5 times forward revenue. So this is still a fraction. Again, a big estimate there that they're going to make 21 million vehicles in the next 10 to 15 years. They're going to do about 450 or 500,000 this year. Big jump, understand that. But what makes me more optimistic is going beyond the automotive play. What they can do potentially in batteries and renewables. We'll hear more about that at Battery Day in terms of being batteries that power the home. I think they can also move into other segments, basically taking their existing technology and applying it to new markets. Like think about cooling. That's one of the aspects that makes it difficult to get off the grid is your air conditioning. But HVAC systems are something that Elon Musk has talked about. They can apply their existing technology around motors and batteries to be impactful there. And then lastly, and this may seem quite absurd, but what they can do in terms of the aviation markets. Now, I want to put this, build a light year gap, and this is a very difficult play for Tesla. But ultimately, can they do something in aircraft with vertical takeoff and landing? That all comes down to ultimately a battery problem. When I put all this together, I think this is going to be a volatile stock. I could see it down 50%, but I feel like 5-10 years from now, it's going to be more than $375 billion. Doug, I'll give you the last word.
I think we agree on the idea this is going to be volatile. I think we agree that this is a good company that's changing the world. I think we disagree on the fact of should you own it here at 2000? Should you buy it here? Let me rephrase that. Should you buy it here? If you own it, I'd hold it. Would I buy more here? I probably wouldn't. I would wait for that pullback that I do think we will get in the next 3 years. But I think long term, you certainly do want to own it. I don't know if they'll sell 25 million vehicles in the next 10 years. I'd take the under on that. But even if they don't reach that lofty goal, I think the stock still could be much higher in 10 years from here. But I'd still wait for that pullback.
I think actually we're on the same page. I think there's high risk of a pullback, but this can be a much bigger company addressing other markets than I think investors fully comprehend. For Loup Ventures, I'm Gene Munster. Bye for now.